that level, and then we want to buy the Bitcoins back at, say, 3,100, which is being a bit conservative because we want to buy it a little bit less than that. So you started with 500, now you've got 710 essentially. You know, and once you divide the 210 by, if you divide 210, the extra Bitcoins that you've got by 20, by 4, that would give me 50 and you'd get 150, and we're both happy. We're both, you know, we've both made some extra coins, and we just keep repeating that same process. If we're going to go into I'm betting there's a 95% chance that this top that we've made here, because it's come into this green period, and the 2013 top is in the exact same green period. It's not a different green period. It is the exact same green period. Then I'm expecting to have a big major top that's going to last for quite some time. The other thing I wanted to show you is the previous top to that, which was in 2011. Now this was when Bitcoin went from like $1 to $32 and then fell away. This top actually was on June the 10th in 2011, if you can see it there. And that top was in a green period as well. So it seems to me that the three major tops that we've had, where we have a top and then the market goes sideways for a couple of years and that top isn't actually taken out, we don't get higher prices for at least a couple of years, are in these green cycle periods. So if we look at a weekly chart, you can see that was the last major top where it lasted for a couple of years before we were able to actually make new highs. And this high here has now come into that exact same green cycle that occurred here, and it's sort of reacting in a similar way. So I'm going to show you the price movement of that. Have a look at this last bit of the rundown, this first decline. It's very similar to the one we just had. If you can see here, we've had the first drop, and then we've had a 50% rally. So if you can imagine, I can't draw the 50% on this chart, but I can draw it on the other chart. It's just the other chart doesn't give me the data on a daily format. If I draw a line from here to here, the 50% of that is around here. The 50%, if you're not aware of that rule, it's a 50% retracement rule. It tends to tell you the strength of a market. If it fails the 50% retracement, then it's very, very weak in a bull market or in a bear market, depending which market you're using. So it has a drop, it fails the 50%. We have two bottoms, and then eventually once we break those two bottoms, we have 1, 2, 3 massive sell down days, and then we recover straight away. And then the 50% from here, from this bottom here to this top here, the 50% there is a very strong support point. You can see it stops within the 50% from that low there to that high there. It stops right in that 50%. And then it runs up into the next green cycle, which came in on the 4th of January, which was here. So 4th was there. And the top was a couple days after it came in. And the other thing is as well, it's gone up to the 75% of that range there, which is another percentage point. So if you go look at this now on the daily, you should see a similarity from this point here. So we have this big bar down here. We did run down for an extra day. The other one had one big bar and then it just ran up to the 50% there. But if we take the range from here to here, which was where the previous bottom was at, that rally there is within the 50% from here to here, which is a sure selling point. It shows a lot of weakness that the market cannot get above the 50% from this top to this bottom. And then it crashes, and it crashes for 1, 2, 3 days down, just like the other one did. And then we rallied we rallied for that one day, and then this retracement here is within the 50% of this low here, and this high here, it's turned within the 50%, just like the other one did, where I showed you here, where we had the rally and then we turned within the 50%. So that was really nice to see that. because back down here, we never had that. We just went straight up from the lows, from that double bottom low. We never had a rally down. We just went straight up into the previous high, which is very bullish. But now we're doing the stepping motion, which is very bearish into this area. The only difference here is that we came back down last night. When I went to bed, it was about 3,850, and we did break a little bit. But now we're still within the 50% from this low here, to this high. We're within the 50% there, which is still okay. Where I'm looking at it to go though is I'm looking for the 75%. So what Bitcoin tends to do, and the Dow actually does the same thing, a lot of markets do, when we start a bear market run, we tend to rally up into the 75% zone, which is just this line here is 78. Oh, you probably can't see that off. It's 78.6. So the 75 is just a little bit below there. So generally what happens is you tend to see markets run to that 75% point. And this is what's called the secondary advance. So this is your first sharp decline. This is your secondary advance. And then she gives way, and we generally always come back and retest this low. And that's where the trade is. So we want to be shorting the market up here. And you're in it because you actually have the Bitcoins yourself. You don't have to short sell them and pay fees to short sell and all that sort of stuff. You're actually selling just what you own. So it's a powerful position to be in because we can sell whatever quantity we want here, have a really tight stop loss, so we're not risking much at all. And then we're buying, we're using the same amount of money we have that we've sold up here to buy back a lot more Bitcoins down here. It's interesting because I was involved with a friend of mine, Dale, she's the lady that put all the life savings into Bitcoin at $2 when she first told me about it. And I was trading some Bitcoins for her here. It's the only time I've actually traded Bitcoins for someone else was actually in this same cycle. So it's funny that I've come into contact with you during the same period. But the other thing is as well with this period, I remember this period specifically because there were a lot of people that didn't know Bitcoin at all that were getting in at this point, and I was advising them not to because it was at a top. One guy, my mate Sammy, was buying a shitload of coins here, and I'm like, mate, just wait, you'll definitely be able to get them cheaper at some point. But he was a bit impatient. He just wanted to get in. And now I've got so many family and friends messaging me every day. Should I buy Bitcoin? What is this Bitcoin? You know, should I buy it? And see, this always happens when the general public, the people that don't know, always get in right at the top here. You know, it happens in every which way you can think of it. They always buy in right at the top, and then the thing starts crashing. They panic, and then they're forced to sell out, rather than them, you know, having an understanding of what Bitcoin actually is and having a long-term view on it. You know, it hits the media and you get everyone in at the top, and that's why I think if you're not looking at this cycle at all, I think we're at a top that we're not going to make new highs on anytime soon. But so that's, in a nutshell, that's the cycle sort of stuff. I just want to show you a couple of times that we've entered some blue periods, because Bitcoin does work to blue as well. And just to give you a rough idea how it works, on this day here, which was the 17th of July, we entered a blue period. We began a blue cycle, and we exited that blue cycle on the 31st, which was just that day there. So you can see during that period we're at a bottom, and then the blue cycle entered, and the market changed direction and went up and made a nice high. So that was a good trade here. So the way I trade these is that when the day of the cycle comes in, if we get a change of direction on the daily chart, I would buy as we take out the high of the previous day here, which is here, and I put my stop loss just below there. So I'm not risking much, and usually trying to make at least 2.5 to 3 times of what I'm risking. Another blue cycle that we had entered on this day here, this was actually the blue cycle before the one that we had here. So that was the 27th of May. Just confirm, because I wrote all the dates down up here. yeah, 27th of May to the 11th of June. So we entered here, 27th of May down there, and then the top was exactly at the 11th of June. So you can see there, that's obviously speaks for itself. The cycle come in on that day. You don't do anything on that day. Once we get above this high area here, we can enter, and we can keep a tight stop loss below here, or if we want to take a little bit more of a risk below there. And we run up all the way into the 11th, which is when the cycle ended. And then again, it speaks for itself. What we're trying to do essentially is work out, like I said earlier, we want to know what's causing these things to change direction like that, so you can get in. And it's not 100%, so it's about 85%. There's going to be times where it just doesn't work every single time 100%, unfortunately. So you can't just go all in on it. You just got to build it up nice and slowly. The previous blue cycle that came in was I think it was the 18th of Feb. Yeah, 18th of Feb, 23rd of March. So where are we here? 18th. Yeah, so 18th is down here, which is on that day there, and the 3rd of March is that top there. So that was a really nice run up into the end, and then into the 3rd, the cycle ended and the market started dropping again. And yeah, it's generally, we can go through all of them for the last 10 years, or not 10 years, but the last 5 years of data that we have. And the blue cycle's pretty good. The green cycle's good so far for catching the major highs. So we've got another green cycle coming in on October 9th, like I was saying. So we're looking for that market to come up and hit that secondary advance and repeat exactly what it did here. We want to see the same thing happen. So we want to see it run all the way up into that last high around the 75%. It's interesting because that top here on this one is that high is exactly the same as the one I was showing you in 2013. So if we get up into that point, this one's added advantage because we have a head and shoulder here. Like I was saying before, that's a massive telltale, this one here. It's a big, you see so many markets have fail at these head and shoulder resistance points, especially when we've taken out this low here. So it's our first low, which is the first sign that the trend is changing. So what happens is a downtrend is categorized by lower lows and lower highs, and an uptrend is higher highs and higher lows. We're going up, and so if we get up here, fail, and start dropping, then there's a very, 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 very strong chance that we come back and retest these lows here. So that's the trade that I'm outlining. The other one I was looking at last night, I was looking at some of the crypto coins and trying to work out some of these cycles in the crypto coins. And one of the ones I did find that had some success was Dashcoin. And if you can see here, we entered a red cycle on the 7th of March, which is just here. And the cycle ended on the 18th of March. So you can see when it entered, it went straight up, and when the cycle ended, Dash came all the way back down. What's interesting is we're in a red cycle right now. We entered it on the 12th of September, and it actually ends on the 23rd of September. So I'm not sure how we're going to do this because you're away, but even if it's just a paper trade, I'm not sure if you can sell Dash, if you can trade it short. I don't know how we can do that. I know you can short it on Polio. I'm not sure if it's having Bitcoins in the account as collateral or how they do it, because I've never shorted on any of the cryptos. I only short on the DAO and stuff, and markets that I trade on with IJ Markets. But I want to short Dash if in the next 2 days by the 23rd it gets up to that double top area, up around here. So if it really extends